Welcome back to Liberty and Finance. This is our returning guest, Andy Schectman. He's the CEO of Miles Franklin Precious Metals Investments. He joins us this Sunday, August 16th, 2020. Andy, thanks for joining us once again.
Always good to see you, Dunnigan. Good to see you, buddy. Thanks for having me.
Whenever we let it go more than a couple weeks, people start saying, "Where's Andy?" because they want your insider's perspective on the gold and silver markets and the supply chains and the availability and the premiums and that kind of thing. So before we get into viewers' questions, can you give us a quick rundown of what your high-level update is on the state of availability of metals and what you see in the next few months going forward?
It's getting really tough, Dunnigan. It's getting really tough to get things on a wholesale level. You know, you can start, as we've talked about in previous interviews, the beginning of the year created a problem, created the problem that is manifesting itself right now. It started with 60 to 65% cumulative of all of the mines across the globe shut down due to COVID, and the refineries that are all located in Switzerland on the border of Italy shut down, and the mints shut down, and the supply chains fragmented and disturbed at best. So that was setting the stage for everything that we've seen since March. Then there was a little period of a respite that we saw here this summer, a little quiet time, the eye of the hurricane. And as I've been fond of saying, I think the trailing edge of the storm is not too far behind. And what concerns me is the supply issue. Getting product is becoming difficult. Let's start with the United States Mint. A couple of weeks ago, they had an announcement that they will not, for the next 18 months, make gold and silver at the same time due to social distancing guidelines at the Mint. So they'll pick and choose each month what to make. That is setting the stage for a massive problem because the Royal Canadian Mint is more or less doing the exact same thing, focusing on gold and silver maple leafs, foregoing production in their other products. The bottom line is simply this, Dunnigan, as I've said on many occasions on this show and others, is that we are seeing massive price inflation in this industry. And price inflation, which to me is, if we take a step back, what I'm really saying is that we're seeing massive demand in this industry at a period of time when the supply chain is fragmented and gummed up from the beginning of the year. So getting silver is really, really, really difficult. Anything that comes available from any of the massive distributors that we work with or the major mints that we work with, by the time we try to get a hold of it, half the time it's gone. It's that fast. And it's kind of a precursor, I think, to second half of this year. And as I've been saying, this market will define itself by inability to source product easily, readily, and massively high premiums. And we're beginning to see premiums inch back up again. And in March, with $10 an ounce premium on Silver Eagles, that was the highest I've seen in 30 years. Well, we're not too far away from that right now. If I sell Silver Eagles at $7.75 over, I'm cheaper than anyone in the country. So I think we are getting close to that period of time where product will be really challenging to get. It already is. And it all boils down to one other thing: secondary market supply. There is none. And that's why they say there is no bull market like a gold bull market, because it's identified by fear and concern. And the higher the price goes, or the crazier this world we live in gets, well, it only seems to intensify people's grip on their gold and on their silver. So no secondary market supply, fractured supply chain, mints running at half capacity, and massive demand. It does not bode well for people waiting for a pullback, because I'll tell you this: every time we've seen a pullback in the last several years, and now it's a much more exacerbated circumstance, every time we see a pullback, within days, everyone who's thinking the same thing jumps on that trade, premiums go way up, availability dries way up. And when I sell out a product to buy more Australian kangaroos, or to buy more Austrian Vienna Philharmonics, or to buy more UK Britannias, I got to place an order, I got to pay more, and then I got to wait for shipping 2-3 weeks. And then I have to tell your listeners and my clients, well, sorry, there's a 3-week delay. And that doesn't bode well for people. They seem to find every reason to think that, that we're playing with money or that we're doing something inappropriate. But the truth of it is that I'm trying my best to bring product to the marketplace. And when we run out of product, we have to buy more. And then we're just like everyone else, paying more and waiting longer. So moral of the story is don't wait for a pullback. It's about the number of ounces more than anything, and less what you paid for it. Now, I know that sounds cavalier and trite, but I'm being honest. I think that the most important thing you can do is have a bird in hand and in the bush instead of chasing it down the street, waiting for a pullback.
Yeah, I've spoken with maybe half a dozen clients over the past 2 weeks who, when silver had run up to near 30, they said, okay, I'm not going to chase this. They said, if everybody else is wanting to buy it, I'm going to wait. I'm going to wait for a pullback till things calm down. And there was, over a 3 or 4 day period, a pullback to the high 23s. That was in the middle of the night. We couldn't really touch it from our side. But the spot price then was back in the mid 24s and high 24s the next day. And I talked to some of those people again, and they said, no, I don't think the pullback is going to be just a few day affair. I'm waiting for it to really quiet down, but people kind of lose interest. And it's like, so we waited and jumped up to 27 3/4 and on off it goes. So there was an article that got tweeted out by Alistair McLeod overnight from Zero Hedge talking about this behavior isn't just at the retail level. This is at the COMEX level as well, that every time that there's this attempt to smash the price down, basically the longs aren't getting shaken out of their position. Even though the COMEX has raised margin requirements, these various tactics that normally in the past would shake longs out, they're not shaking out. So that's what I was thinking about when you were talking about people who believe in ordinary times. Yeah, you just wait for a pullback, wait for a nice down week or whatever, and then go ahead and make your purchase. And then they asked me, well, will you still have product if it does have a pullback a week or two from now? And I have to tell them, first of all, I can't tell you what the price is going to be tomorrow. If I did, we'd all be doing. If we all knew, we'd be doing that. And secondly, I can't tell you there's going to be product available next week or 2 weeks from now, even if we do get a pullback. So,
well, remember, done again in March, we had $11.80 silver, and the Silver Eagle was $22. So the pullback comes with higher premiums. They're almost hand in hand, because for every one person who thinks he or she is a genius waiting for a pullback and nailing it, there's 100 others who are doing the same thing. And, they may nail the pullback correctly, but getting in and getting the product at a subsidized level when you factor in the premium and the delivery delay, it may not really be beneficial at all. In fact, it may be detrimental. And I think the way things are moving in hyperspeed as we get closer to the election and to the fall, having a core position in hand is really important. I guess if people are trying to cost average on top of their core position, fine, more power to you if you nail it. But I am very concerned, as I've been saying over and over and over again on your show, that supply will be the determining factor, or really it'll be the focal point, I think, for most of us in the industry here. And it's a cruel irony that we have demand unlike anything we've ever seen. And the biggest concern is not how late should we stay up every night taking orders, doing business, but can we get the product? And can we get the product in a timely enough fashion without upsetting people? And that's the truth of it.
Yep. So that's the message I've been trying to give people, is they need to decide strategically what they want to accomplish. And as you've said in the past, look for the major trend and make sure if you want to be participating in the major trend, make sure you are participating.
Yes. By the way, Richard Russell said that, and I'm sorry to interrupt you. I think Richard Russell, who was my mentor in many ways, that was the couple of the best pieces of advice I've ever received from anyone was from Richard. Identify the primary trend. That's the key here. What is the primary trend? It is of a troubled dollar, a troubled U.S. market structure, and of rising gold and silver. So yes, absolutely. Identify the primary trend, take a big position in the primary trend, and broadly diversify within the primary trend. Don't be broadly diversified in this market. Broadly diversify within the primary trend. Gold, silver, platinum, palladium, mining shares, agricultural ETFs, farmland, on and on and on. So anyways, so I digress. But yeah, I think that these are interesting times where getting it in hand is really going to come at a premium.
There's a couple of questions here about the volatile markets and how they're affecting not just Miles Franklin, but any bullion dealers. Larry Engel says, What are your thoughts on dealer premiums going forward? I can see a day within the next 6 months to a year when a dealer such as Miles Franklin doesn't offer anything because the prices are violently fluctuating. So can you address that? You have in the past about how we have to hedge, but how does volatility affect our ability to do business and to provide a market?
Well, first of all, typically, if you look at bull markets in the past or bear markets, big ones, sell-offs or upward movements in the market, they're typically preceded by a tremendous amount of volatility. So I think that bodes well for the thesis that gold and silver are moving higher. There isn't a lot of volatility in the marketplace right now. As far as our ability to transact business in a volatile market, one of the things that a lot of people have a hard time understanding is the concept of hedging. I was reading a comment on one of the other YouTubers I did an interview with the other day, and he made a comment like, well, he makes $30 an ounce, you should buy on eBay. And I'm thinking $30 an ounce, try 30 or 40 or 50 cents an ounce. We're not making $30 an ounce. There is a premium above the actual inherent cost of the metal, a big premium. And it starts with, the mint's ability to produce, the cost of production, advertising, distribution, packaging, etc. And in normal times, you're right, those premiums are much lower. But the underlying metal, we are always hedged. And I just would like to talk about that for a moment so people understand. If I have 1,000 ounces of gold in my warehouse, I have to sell 1,000 ounces on paper to be market neutral. Because if last week when the price of gold fell by $100, I would be down $100,000 if it were not for what I sold short, commensurately moving up the exact same amount that my supply moved down. So we're always market neutral. We can't hedge, however, those big premiums. And this is where it gets a little bit nerve-wracking as a business owner, because if I want to go, let's say I sell out of all my Australian kangaroos and I want to go buy another 15, 20, 30,000, and I have to pay $4 an ounce over the price of silver to buy them, I can't hedge that. And then what if all of a sudden there's some miracle cure to or treatment for Corona, and everything turns around and people are out and gold collapses and the premiums collapse? Well, I'm out that money. Bottom line is simply this. The premium is a risk for me and for you and for your listeners and for anyone who's buying gold and silver. It's a question, do you want to pay for it or not? What's it worth? What's it worth to you? I'll tell you what it is to me. In order for me to stay in business and have product, and Dunnigan, you remember how many people kept saying to us in February, March, April, how do you guys have product when no one else does? Because I was courageous enough to go out and put all of my line of credit on the line at high premiums and buy it when no one else had it. Even though they were all selling it at high premiums and they didn't have it, we did. And when I sell out a product, I got to go buy more and pay a higher premium. And it's been escalating every single time I call the distributor or call the mint. It's a higher premium and another delivery delay, going back to what we were saying. So I don't know what to say other than to simply say we will keeping on as long as we are able to, as long as the COMEX is functioning, as long as we're able to hedge our production, as long as there is product to buy. But it will come at a higher premium if the trend continues, as the demand keeps outpacing the supply. And that's just basic Econ 101.
There's another question here from a different viewer about local coin shops and that sort of thing. You talk to dozens and dozens of coin shops across the country because they are potentially a source of you getting additional metals. LS says, how many or what percentage of local coin sellers may not reopen or may have improperly hedged and may close soon?
All of them. All of them. None of them hedge. 1 out of 1,000 hedge. They're too small. I get calls all the time from coin shops who they take in a big order and they call me immediately before the customer leaves the office to hedge it for them and buy it from them. So in an environment where no one is selling and everyone is buying, coin shops are in big, big trouble. I'd like to also draw an analogy to what's going on here, why this is happening. In 2008, when there was a bailout, that money went to Wall Street and the Wall Street banks and the Wall Street bank assets, stocks and bonds, and to a much lesser degree real estate, but I'll buy that too. So stocks, bonds, and real estate all directly benefited from the Fed's intervention and bailouts of the Wall Street banks in 2008. None of that money came to Main Street. Well, what's happening right now? $3, $4, $5 trillion being directly given to the public, to Main Street? A lot of that money is going into gold and silver. And so because there's nowhere else to put it. Now, again, a lot of that money is going to pay for rent and for food, but I'll tell you, I've had a lot of people call me and say, well, I'm getting that $600 a month from the government. I'm going to put it right in the silver. Even if it's not silver and gold, what we're going to begin to see is price inflation here in the real world, because all of that money this time through the PPP, through the CARE Act, through the $1,200 to every man, woman, and child, all of that money that was given out is beginning to show itself in real-time price inflation here, not just in precious metals, but we're going to begin to see it in the economy at large. And but I think precious metals is a benefactor of it first because of the lack of alternatives in both equities at their all-time high with record unemployment and a bond market with negative interest rates when you factor in inflation, real negative interest rates. So anyways, I think that it's only going to get more difficult. And, and the ability to sell product will only get more difficult in the light of higher premiums, longer delivery delays, and fractured supply chains.
That's one of the things that I've had to have heart-to-hearts with the clients who've talked to me about, is because they'll say, gee, in the past, I always could just go to my local coin shop, but they're closed. Sometimes they're closed because of COVID. Sometimes they're closed because they're just out of product. Others say, well, I didn't even go to a local coin shop. I had a guy that I knew locally, and I worked through him, and now he can't get anything. Or I've tried the other online dealers, and they can't get what I want. So that inability to find available physical supply is rearing its head every week in conversations that I have now.
We are uniquely positioned, and again, we are uniquely positioned because we have a very diverse supply chain throughout the industry. Most of the online companies rest their hat on one giant supplier. I work with every one of those suppliers. I know who they are. They don't broaden their reach out into the small companies, the coin shops, and we do. And that's one of the reasons that we've had it. And also, as I've mentioned in shows past, I owe a debt of gratitude to Chris Martinson and Peak Prosperity for alerting me for a very long time to what's been happening. And for that reason, since the beginning of the year, it has been my singular largest focus to secure supply, not just in March and April, but also moving in. I've told my staff that I am very concerned into September, October, that we better have enough product, because I think that's when it gets real crazy in this environment.
There's more questions in the same vein, talking about not only gold and silver, but platinum. We've got James C. says, with gold eagles having a face value of $50 and platinum eagle has a face value of $100, yet it takes 2 platinum eagles to acquire 1 gold eagle. Is that fact hidden in plain sight in your thoughts on the current value ratio between platinum and gold?
I've never really understood what the rationale was for putting face value on these coins anyway. I guess I've thought about the fact that gold was valued at $42.22 an ounce. I think it still is on the official price on the books, the U.S. government. So if they ever wanted to confiscate gold, well, they could all give us a subsidy of $50, make an extra $7.50 or 60 cents an ounce. I don't know what the face value means. I will tell you that platinum is an anomaly when factored into its relationship with gold over the last 100 years. There's no question about it, and it's a true value play. But no, the face value to me in this case is more coincidental than anything else. And but oftentimes we can find a little bit of truth and logic hid inside of a coincidence or a joke or whatever. So I don't know. I don't know if the face value has anything to do with it. But I will tell you that platinum is on par with silver in terms of its anomaly in relation to gold. The only real difference is it doesn't have the historical precedence as wealth. It's more of an investment. It's not to me money in gold and silver, platinum and palladium being more of an investment, and arguably a darn good one right now when looking at it in its relation to gold.
Question here about how high silver might go. Nobody knows. we've seen wildly different numbers. Ironically, Bill Murphy from Gata.org, who's often been seen as a cheerleader for the metals when nobody else cared anymore over the past decade, he was always calling for $100 silver and people thought he was crazy. Now I think that's the lowest estimate of anybody who's got price targets out there. But this question is based on math, and Safety Compliance Consulting Services says, we all know silver is undervalued, but could you comment on the inflation-adjusted value of silver? Because the 1980 high of $50, inflation-adjusted, and this is arguable depending on whose numbers you use for inflation, could be up to $600 just on an inflation-adjusted basis. Is that a real possibility, or are we all crazy? What are your thoughts on the inflation-adjusted highs for silver going forward?
Well, the real levels of inflation are hidden from us. So John Williams could probably be a good person to ask that question. I'll tell you that I have learned in 30 years of business that bull markets go a lot higher than anyone thinks possible, and bear markets fall a lot further than anyone thinks possible. I remember when I started, the Dow Jones was 2,100 and the Japanese Nikkei was 39,000 in 1989. And no one would have thought the Japanese Nikkei would have fallen with interest rates at or near zero the entire time to where it is today, basically half of what it was 30 years ago. And the Dow Jones conversely moving up 15 times. I think that if we just do a little math right now, let me just grab my little handy phone here with the calculator. If we take gold, let's call it 1,900, and I don't even know what it is today. Let's call it $1,950. Is that about right?
Close.
Let's 1950 divided by 42. Let's call it divided by 45. That's $43. The 150-year average of gold to silver has roughly been about 45 to 1. Minimum, it should be $43 an ounce right now. You got Bank of America and Merrill Lynch calling for $3,000 gold. So, add another $20 to that, you should be at $60. I will tell you that I think it'll go higher than anyone thinks possible. $100 an ounce is plausible. It sounded crazy. So did silver moving up or down more than $1 a day, and gold moving up and down more than $100 a day. The real problem is that what we're valuing it against, a dollar that is being inflated away. So what $600 silver would portray would be very, very bad times in this country. A can of Coca-Cola would cost you $12, or a hamburger would cost you $8 at McDonald's, or whatever it may be. So higher than people think possible. Look, it's a depleted asset. It's getting harder and harder to find. There are only a couple silver mines on the planet. The rest of all the silver that comes to market is a byproduct of mining other metal. So you have to dig further. You have to expend more energy and explore further and pay more money to get lesser and lesser and lesser quantities of silver that is becoming more and more relevant in this digital age that we live in. So I think the industrial side of things is going to take off at some point when the industrials realize, geez, I better load up on silver. And Ford Motor Company proved that in the early 2000s with palladium, when they realized that, well, geez, I better load up on my catalytic material or else, and the price of palladium went to the moon. So that's when palladium was used, or when they were retrofitting their platinum components to palladium for the catalytic converters, because platinum was too expensive. So they took a huge position in palladium and up it went. Well, the same thing would be true here for, maybe Apple or Microsoft. They need silver, even in little tiny amounts, to produce their phones and their computers or whatever it may be. At some point, if things really get crazy, you'll see the industrials really jump on board and secure as much as they can. And that could very quickly push the price up exponentially, let alone the massive investor demand. So picking a price target is just really throwing darts blindfolded. But I'll tell you, I think it will go higher than anyone thinks possible. And that I do believe.
A lot of clients who have reached out to me over the past couple of weeks since we spoke have been asking, surprisingly to me, for American Silver Eagles. They say, I've been holding out because I wanted to get a really good price. I was waiting for a pullback. I was waiting for premiums to come down. But now I just want you to, how much would I have to pay right now for Silver Eagles? So I'm hearing in one ear that they want to get as much silver as they can because they're waiting for a pullback or waiting for low premiums. But on the other hand, they're asking about Silver Eagles, which are the highest premium form that I could possibly offer them. And I try to point that out to them and say, hey, you could get the same amount of ounces of silver for less, or you can get a lot more ounces of silver for your budget if you look at some other forms. This question from Joe Sedlak says, Why are American Silver Eagles roughly $3 an ounce more expensive than Canadian maples? Monster boxes are thousands more. Will maple leaves be harder to sell?
No, it makes no sense. Actually, I'm one of only 27 authorized U.S. mint resellers in the world, and I'll tell you they're too expensive. I won't buy them myself. Let's look at a comparison. Normally, a maple leaf, a kangaroo, a Philharmonic, Britannia, they're all going to be about the same price, and they'll all be about 50 to 75 cents cheaper than an American Eagle, not $3 or $4. So it's irrational. And maybe it has something to do with all of the new people coming into the marketplace for the very first time that just want something American made. I don't know. Does not make sense to me, and I would not buy them. And I think there are much better values in kangaroos, in Britannias, in maple leaves. And the maple leaves are expensive too, but this is what we're talking about. Price inflation. Price inflation at a time when there's a broken supply chain and prospects of it really getting worse, I think, because demand is only going to get more and more crazy, in my opinion, as we head into the fall. So I don't see the premiums coming down on the American Eagles whatsoever. In fact, only getting worse because the mint said, well, we're not going to make them every month. We have to do gold one month, silver the next, et cetera. We'll pick and choose. Well, you have the two major supply sources in North America running at half capacity, the U.S. and the Canadian mint, trying to keep up with demand, but almost making it very difficult for us to sell their product because it comes with, not only does it come with high premiums, but I'll call some of the biggest distributors in the world and I'll ask them, what's going on with the Eagles? When are they in? I see you have them on the sheet here. When are they in? Well, Andy, I don't know. We're not getting any guidance. There wasn't an allocation this week. Hopefully next week. I mean, it's all, hopefully this. Well, it's like, you don't know. There's nothing concrete right now with the U.S. Mint or the Canadian Mint for that matter. I placed a very large order for Canadian maple leaves up at one of our Brinks depositories. So it's delivered directly from the Royal Canadian Mint. This was into Vancouver. As you know, we have storage facilities in Montreal, Vancouver, and Toronto. And so we're very close with the Royal Canadian Mint. And the order was for north of 15,000 silver maple leaves. And I was told, this was maybe 10 days ago, 2 weeks ago, I was told that the shipment would not come until probably the first week in September. Probably the first week in September. So, in a storage facility, it's not as big of a deal. But if one of your listeners wants a whole bunch of silver maple leaves and I take the order and I say, well, you're not going to get it till probably the first week of September, and then the mint shuts down again like it did in March, then what? Then Andy's a bad guy. Point of it is that there's risks now in waiting. There's risks in buying things that aren't in stock. There's risks in buying things waiting for a pullback. That's why there's an old saying, a bird in the hand is worth X in the bush. And so, but I would not buy Silver Eagles, that's for damn sure. I think they're too expensive.
Related question on Silver Eagles for this year. M. Summers says, what's your prediction for 2020 Silver Eagle year-end production numbers? How will the premiums compare to other years? Is there a similar year in the past that will mirror the 2020 Silver Eagle with coronavirus, mining, refiners, minting, all that stuff you talked about last year of the design? It adds up, right, in terms of the scarcity of the 2020 Silver Eagles.
I don't know the numbers. I would suffice it to say I think it would probably be the most sought after year ever, with the exception of 1996, which is the really rare one. I think because it is the last year of the design, because the production numbers are going to be so small, because 2020 has just been such an insane year to all of us, I would think it does have some collectability. I think all of the 2020 designs will. This September, we're supposed to see a palladium coin from the U.S. Mint. And so I think any of the, but go try to find a 2020 Platinum Eagle right now. It's as rare as hen's teeth. And, or a Philadelphia Mint Silver Eagle. I think they only made 250,000. I was selling those to some people who demanded them. They wanted them at over $50 a coin a couple weeks ago. And then they did it with eyes wide open for that reason, because they too believe that 2020 will be the year to collect from a collecting standpoint. I would like to also just make one point, and kind of bothers me. It's kind of a rub that I have. A lot of the online companies out there will tell you that the backdated Silver Eagles are worth more money. And if you go to some of the online companies, they'll show 2016, 15, 14, 13. Yep. And they all have different prices, and a lot of them are much higher.
Yep.
That's a lie. That's 100% lie. And I hope whoever listens to this can just let that sink in. It is a scam. It is a lie. And it's how they justify selling current year issues so cheap. Now, I made a promise that I'll beat all these guys' current year issues. And at the same time, if I have backdates, I'll sell them to your listeners cheaper than the brand new issue. It is a lie to pay a premium for backdate silver eagles and gold eagles. They're trying to turn you into a collector when it has been my experience that there is only one silver eagle that I will pay you a big premium for, period. And that is the 1996. The rest of them, it's a scam and it's a bait and switch, and it makes me very, very angry. And I just want to say publicly, it is a lie. So there.
Thank you. Related question about scarcity or collectability. Jesse Pareto says, I've asked the question before, but still looking for an answer. How does your company evaluate the current value of any numismatic coin when an owner wants to sell? So when we do buybacks on coins, how do we give a buyback price on numismatic coins?
Well, first of all, if they're certified, it's less subjective than if they're not. If they're not certified by PCGS or NGC, you have subjectivity involved. Then we have to have a numismatist look at it, and we have an in-house grader. He's been doing this for over 40 years, and he certainly can do that for us. But a graded coin is relatively non-subjective. PCGS and NGC are there for a reason. They're there to level the playing field. Now, I will say one thing that I found frustrating with numismatic coins, and PCGS and NGC address this after the fact. I think it's PCGS Plus or PCGS Star or NGC Plus or Star, something to that extent. Where now, or a CAC sticker, now what that means is that PCGS and NGC are aware of what I think is the flaw of their grading system, and that is eye appeal, maybe more specific. If someone were to sell me an MS65 St. Gaudens, I'll give them two prices. I'll give them a spot-free price and a spotted price. Now, since I'm going to explain this in a moment. Since this has become a phenomenon, PCGS and NGC have addressed this, as I mentioned, with their enhanced grading or the CAC designation or whatever to address this problem. But when these coins, which are not pure gold, are put into a holder, they are alloyed. There is other metal in there. And if they're hermetically sealed, but if a little pinprick of air gets in that holder, and now it's in there, it's oxidizing the coin. And you'll either see a little black spot, which is carbon, or a little maroon spot, which is rust. And the dealers will really drop the price of those coins. So for your listeners who want to know, go look at your coins. The best way to do it is hold it up against a white piece of paper on the background and look at them and see if they're spotted. If they're spotted, you're not going to get a full price on them. You're going to get a discounted price. And I, quite frankly, find it annoying because the whole concept of PCGS and NGC is to remove subjectivity and to level the playing field by giving it a standardized grade. But that is one of the fallacies of it. In the higher grades, if there's spots, and a lot of the companies out there have sold spotted coins because they buy them cheaper, we guarantee that all of the numismatic coins we sell will be spot free. And if you find spots, you can rest assured you're going to get a lower bid price when the company who buys it from you looks at it. But in general, there are a couple of large auction galleries like Heritage and Stacks. And these folks are the market makers for numismatic coins. And they are the ones setting the bid and the ask by and large. I'll tell you that they are beginning to really take off. And the premiums, I was begging people for a couple of years to buy them because there were no premiums, and now they are really starting to go high. And the higher the premiums go, the more selective they will be on the coin. So if you have spot-free coins, you will get a price, at least from us, that will be reflective of what the major market makers are buying them for, which will always be amongst the very highest price in the country. And if they are spotted, you can basically look at up to 10% off of that price taken right off the top, because we can't turn around and sell them at the normal price to people if they're spotted. So we have to discount those to other people as well. Hope that makes sense. It's kind of a convoluted question, but look, bottom line is, if it's certified, for the most part, it's non-subjective. If there's spots, up to 10% is coming off the top. If they're low grade, not such a big deal, but higher grade, 63, 4, 5, 6, yeah, it's gonna affect the price.
Another question that's come up with multiple clients, especially recently, as the price has gone up for silver, and we anticipate that may continue for the next year or 2 or 3, people are getting more and more conscious about where they're storing their metals. They start to realize, gosh, this thing that I have, if they got a monster box, for example, it's not just a brick sitting in my closet, it's something that's of significant value. They want to know about, can they purchase it and not have it shipped directly to them? So it's kind of like there's two camps emerging. People who say, I absolutely want it in my possession, ship it to me, I want it in my house. Other people saying, I would like to buy, but I live in an apartment, or I live in a big city where there's unrest and riots and that sort of stuff. I don't really want this in my house. There's been some misunderstanding of people not realizing that they can purchase from Miles Franklin and have it go directly into storage for them in a secure vault, that they don't have to necessarily take physical delivery. So can you just touch on what the options are for people in that regard so that they're aware?
Yeah, sure. So we have storage, as I mentioned earlier, in Montreal, Vancouver, Toronto with Brinks. We've brought that Brinks program down to the United States, the only fixed rate program in North America, based on the number of ounces people store rather than the value. So you're betting on the come, so to speak, and that as the price goes higher, your storage rate stays the same, goes up exponentially with everybody else. And as it is right now, we're pretty much the lowest rate in the country, and it's a fixed rate. But we can send it to Montreal, Toronto, Vancouver, Los Angeles, Salt Lake City, or New York City, JFK with Brinks. We have the Dakota Depository in Fargo. We have helped people out with TDS Vaults, which is a Loomis facility in Las Vegas. We have options. We can send it to any of the storage facilities that people work with already on any part of the North America, really, and it's not a problem at all. So, yeah, I think people should take physical possession until it gets to a point where they are losing sleep and are wondering, Jesus, is this the right thing to do? I'd rather see them dig a hole in the backyard and bury it there than put it in a safe deposit box. But if you're looking for a place to put it, yes, the Brinks facilities or Dakota Depository or any of the storage facilities that we work with would be no problem to get it to whatsoever, directly after purchase without going to the customer first. By the same token, one last thing for your listeners out there who have product at home, who are wondering, what do I do with this? I made a mistake. Well, sure, we can help you. Send it right to one of those facilities where it is fully insured, very easily done, and we do take product that wasn't even bought from us. So we're happy to help with that.
There's people have asked about how the logistics of that work, and I know we provide documentation on people. They need to double box their material so it doesn't, and have it padded well and tightly so it doesn't jingle when moved, and then they mail it insured, registered, and gets put into storage.
Good deal, yeah. And we can even have UPS come to people's house and pick it up with great anonymity. So getting it to us isn't an issue so much at all, really. We can make it very easy.
Ian M. asks a question that I get asked every week, if not every day, and that is there a minimum purchase? I know you've talked about it before, but might as well address it again, because we get all different size customers and all different size stages. Sometimes it's the first time working with Miles Franklin, and they want to start with a small purchase so that they can see how that goes, that sort of thing. So can you address that topic of minimum purchases?
We have no minimum purchase. I would suggest that anything under a few $100s is probably not appropriate, being that we have a $15 shipping charge on under 100 ounces of silver minimum. Now, I would say to you that we would want to earn anyone's trust in business, and we are not so far removed from reality to not appreciate any order. And I think that's the way you make money in a business, is that you service everybody. Sell as much as you possibly can. Yes, it would be better to work with millionaires every day, but the reality of it is that we built our business from the ground up, and we haven't forgotten where we've come from. We come from nothing. In 1989, when my father and I started, it was with a loan from his best friend and my parents selling their life insurance policies. So We come from nothing, and I am not ever going to institute an order minimum. So if someone wants to buy 2 coins for Christmas, great. We're honored that they want to work with us. But there is a $15 shipping charge if the order's not large enough. And short of that, no order minimum. We're honored to work with everyone of any financial capability.
All right. As long as you're talking about the ability that people have to decide whether they want to personally retain possession of their metals or put them in storage, people are looking forward to the prospect of vastly increased metals prices in the next couple of years and wondering how that changed landscape will affect how much insurance is going to cost to ship metals around, that sort of thing. LS also asks about how it's going to impact premiums. Will the percentage of premium decline for purchased silver even after all this craziness hits the fan, since silver will be more highly traded, therefore creating a smaller spread on average? So I guess he's talking about how sometimes like highly traded stocks, for example, tend to have a pretty tighter spread if there's a lot of volume rather than thinly traded stocks where there's a... So in your view, is that a viable analogy that when silver is more thinly traded, the spread opens up and it'll actually get narrower when the volume goes up, or is that completely not going to happen?
Well, I guess if supply was constant, then the spread would probably narrow as demand got more and more and more, because it wouldn't be as reflective against a backdrop of bad supply. To me, it's the supply that is creating the spread. It is the fact that, it's like backwardation, where in your hand today, it comes at a premium to down the road. And when down the road is murky, when we don't know what's coming, when we don't know what supply looks like, and if it's following this trend chart, I would say it spreads widen in the respect that, well, let me rephrase that. I would suspect that spreads narrow, now that I think about it, in this respect that if the supply doesn't get any better, I'm going to be willing to pay more and more and more and more from people to buy it and to offer it. So this is a kind of a twofold question. The bottom line is that if supply doesn't get better, you're going to see premiums rise and probably narrow, simply because getting product is the most important thing. But here again, there is no secondary market selling right now. So the concept of spreads is somewhat, I don't know. It's a difficult one because no one is really selling. So premiums will rise, spreads may narrow, simply because everyone will be looking to get their hands on it. So I don't know how to answer that question, Dunnigan. I'm sorry. I don't, other than to just guess that in an environment where no one wants it, spreads widen. You pay less, and the bid prices go down, but where everyone wants it and no one is parting with it, the spreads would narrow. And I think that's where we're going to.
Since you mentioned the dynamics of a market where there are buyers but no sellers, Busy Mountain asks, if silver goes absolute, quote, no sellers, what are the chances of many silver dealers or buyers putting into place a private buyback service? In my mind, if holders feel uneasy even selling if silver goes to that extreme, so how are they protected from prying eyes? Can you talk to us about what we provide for privacy on a buyback even today?
Sure. Well, we are always making a two-way market. We have the ability to assist in shipping through UPS. We can have them come to the house, pick up the product. It's only minimally insured through UPS. The majority of the insurance is placed on it through Lloyd's of London in a tracking system that meshes with UPS's. So the drivers and UPS themselves only see a minimally insured package with that gives it special care. It takes it out of the Amazon stream, but doesn't give any inclination to them whatsoever what they're picking up from whoever's selling the product. Will guarantee the highest bid price in the country. But as far as selling or sending back the funds, well, that's where the loss of privacy ends. And I would never recommend someone not report the sale of a large amount of metal when they're getting a check back into their account. If they're audited, then what? Which brings me to another quick point that I'd like to make, and that is on a swap. So let's say in this same example, someone wanted to sell some of their gold and buy silver, take advantage of a swap. Everything there applies. We have send UPS to pick it up. UPS has no idea what they're picking up. The metal comes to us. Now, in trading gold to silver, that's two separate transactions. Gold to gold or silver to silver would be like for like, one transaction. But a gold to silver, a gold to platinum would be two. So the client sells the gold to buy silver or platinum. That's one transaction. We issue them a receipt. That's where their reporting requirements end, okay? The loss in privacy in and of itself, done again, in buying gold or silver is writing out a check or sending a wire, which they would never have done in this case, because what they're getting back is a portion, or is used with the proceeds of what they sold. So they sell the gold, they pay their taxes, they file their taxes with their accountant or their whatever, and that's where it ends. Now, the proceeds are used to send back their silver or their palladium, which legally comes paper trail free because they never wrote out a check. Now, no one in the world knows they own it completely and totally legally. So there are ways to find privacy, even through something like a swap, where it looks as though the client sold all of their metal. What they did with the proceeds is their business. No one ever asks them that. And what they did with the proceeds is to apply the credit towards a different product, which then is returned to them without any paper trail. But in just selling, the privacy is the whole way through until the check comes, and then there's a paper trail. So, but we do go out of our way in buying and in selling to ensure people's privacy. It's very important to us that anonymity and privacy be held in place. Our boxes, as an example, have no identifying markings on it. They're packaged incredibly well. You need a ice pick and a jackhammer to open it half the time. No rattling, no precious metals return label. So anonymity and privacy is always important to us and to your listeners, and rightfully so. So please understand that that is the top of our priority list.
I guess that's another thing you've talked on in the past, is the reason that you talk on it again, and that is, why do we not provide an online storefront like so many other online dealers do, where they can go click and put their shopping cart and go back and look up and see all the orders they've done in the past, again, primarily for privacy reasons.
100%, and I don't want to name names, but there is a group in the industry that owns 2 or 3 precious metals companies, big ones. And they came to Minneapolis to buy my company a couple of years ago. And I said no after 4 days at my attorney's office. I appreciated it. I wanted to go through the process, see what it was like. But this company, which is highly sophisticated computer programmers, one of their main sites was hacked badly. And letters were sent out to people that would say something like this: Mr. Kaiser, here is the list of coins you purchased from Company X, and here is your home address. If you do not send me 1 Bitcoin by Friday to this address, I am going to publish to the dark web your address and what you bought. Dunnigan, I can't tell you how sophisticated these hackers are. They're state-sponsored in many cases, and it made me shut my store down. And I don't care that I'm losing a little bit of business. That's why I go on these shows and say I'll beat any price in the country if people have the patience to try to get a hold of us. And right now, it may take a little longer than people like. Might take a day, might take a half a day. I try my hardest. I'm literally working 18 hours a day, truthfully, responding to emails, making phone calls, and so are my brokers. But we're old school. And we're old-fashioned, and we do things analog in the digital world. But if people are concerned about privacy, the last thing you want is a digital footprint. And that's what online stores are. No matter how sophisticated they are, the group that came to buy my company, I viewed as the most sophisticated bunch of programmers. They're Wall Street-based programmers. I was blown away by their platform and what they had to offer from a technological standpoint. And then I find out 6 months later that one of the companies they had bought, that platform was hacked. Now, these are Wall Street-based platforms and incredibly sophisticated. But so too is the level of fraud and the sophistication of the people trying to pry money away from companies like mine. And, when you're a bank like Bank of America or Wells Fargo, and you can spend $30 million on IT support and that kind of stuff to build a bulletproof infrastructure, great. But when you're a precious metals company, you can't do that. And so to me, it's not worth the trouble. Not worth the trouble at all. So I guess the bottom line is privacy and anonymity It has always been the cornerstone of our business, and I will always see to it that it stays that way. And for those people who just really want to go online and work, without talking to someone, I get that, and I'm sorry won't be able to take their business. When the day comes that they want to do things a little bit more old school, we'll be here to offer the best price in the country and take good care of them. That's for sure.
Thanks, Andy. We've been speaking with Andy Schectman, the CEO of Miles Franklin Precious Metals Investments, this Sunday, August 16th, 2020. Andy, thanks for joining us again on Liberty and Finance.
You stay well done again. I'm always going to be here when you need me, and it's an honor to be part of what you're doing, and a great appreciation as well.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.